There we go. Good morning. Good morning, colorful Colorado. It is Anna Kibble, your district director here. I am joined once again this week with our friend Andrew Batson with Encompass Lending Group. Good morning. How are you?
Oh, I'm doing great. Great to be here again. Thank you.
We started having a conversation last week, and then we continued some of it this morning. But talking about different loan products for our investor clients. Maybe people have already identified as an investor, or maybe people who, investing in real estate might actually be their solution to getting into their first home or their next home, which is a really cool way to think about this. Andrew, tell me a little bit about some of the loan products that work well for investors that you guys offer at Encompass.
Yeah, absolutely. Well, when we think of an investor, it's a good point because you mentioned, somebody, buying a home. I know when I was 18 years old or whatever, 19, freshman in college at CU, I would just read all these books about, how to make $1 million in real estate investing and everything. And I don't think that's changed. Like I talked to my son's 20 years old or 21, and his friends are all, talking about real estate investing, even though they've never bought their first home. So, yeah, I think real estate investing is a really incredibly important topic for all of us in the industry. And there's a lot of loan programs for investors. And sometimes it's an owner-occupied loan because if you live in it for a year, that's okay. You can then rent it out. But specific to an investor, you're looking at your conventional loans, right? That typically require a little bit more down payment. 20% down is pretty typical,
Okay.
or more for a non-owner occupied property. One of the things that's really exploded in the last 5 years or so is the DSCR loan, and that stands for debt service coverage ratio. So kind of a very technical, boring term, but essentially instead of qualifying based on your income, you're only qualifying based on the income that that property will generate. The idea being maybe you want to buy a property that's a short-term rental, maybe it's a long-term rental, and your job income, your W-2 income wouldn't be enough to cover that. Uh, they're not going to look at any of your income, any of your W-2s, any of that. They're simply going to look at how much money does that property rent for, and is that more than the payment? And there's a factor. So it needs to usually be like, the property needs to generate like 20% more income than the mortgage payment will be. So we have a little cushion there. Now, that doesn't always work. Like you can't just go pick up any property in the Denver metro area and have it rent, for more than the payment. But yeah, this is a really good way for people that are trying to build a portfolio, and maybe they're self-employed. They don't even show the income that would be necessarily to normally qualify for the loan. Uh, None of that's looked at. It's just strictly what is that property rent for? So DSCR.
And typically that's going to be at a 20%
Yeah,
equity
yeah.
piece
Typically, it's
or
still going to be a larger down payment. Yeah, it's
yeah.
typically still going to be 20% or more down payment, and 20 to 25. Um, interest rate's a little bit higher. So if you can qualify for a conventional loan, typically like think of the standard kind of conventional Fannie Mae, Freddie Mac type of loan. If you can qualify for that, the rate's going to be a little better. They're still higher though. Like they definitely ding you as an investor. You're always going to pay a little bit more for a non-owner occupied loan. So even though you're doing conventional, the rate's still going to be a little bit higher. But the DSCR is definitely been a little step above that. Um, so which makes, I think it's important to recognize that for a lot of people, they become real estate investors because of their first home that they own. They keep it and move on. And I think that's a great strategy. You can buy your primary residence, typically 3.5% down on an FHA loan, or 3 to 5% down, or even zero down. And you get into that home. Maybe when you're working with a buyer, maybe this isn't their dream home. It's not what they really want, but take that opportunity to get into something, maybe it's less than what they can qualify for. That's a great opportunity to get into a property, live in it for a year so that you've, honestly satisfied your intent was to own or occupy. There's no penalty. Sometimes there's a misunderstanding that like you get an owner occupied loan that you can never move out of that house. That's only true in some sort of income restricted, neighborhoods where it's affordable housing, right? But generally speaking, if you buy a home, you live in it for a year, your intent was to live in it, you did, you spent a year there, then you can keep that home and then, move on, buy your next property and keep that. I know I did that, rewind 33 years ago. I think roughly I bought my first home in Boulder, and at the time, of course, nobody likes to hear how cheap houses were back in the day, but I bought it, and a year later it was worth this. Now it's worth 10 times as much. But yeah, buying that first home, keeping it as a rental, you have very little equity invested in that, and then oftentimes, if the market's going well, maybe it's gone up in value, you can pull some cash out of that property and use that as your down payment on the next property. And that's a great way to build a real estate portfolio. Real estate investing is not for people that expect immediate cash flow or get rich quick type of scenario. It's usually, but boy, inflation and appreciation on a leveraged asset like that over time, it's a pretty surefire way to build wealth. So as agents, I think it's something that being informed about real estate investing, kind of knowing the lingo, knowing the financing options out there is important. So I'm happy to chat with anybody about it. I think well, I don't know. I've flipped a lot of properties too, but bought and held 30 or 40 properties for dozens of years, and so I know the pros and cons of it, but in the long run, it's definitely a very lucrative investment for people, and also saves you on taxes too. So
Absolutely. I love that. And sometimes we don't realize that there are different lending solutions for investors, right? And so it's really
yeah.
important to know that here's the thing. I like to think when there's a will, there's a way,
Yeah, yeah,
right?
yeah. Most of the time, we'll do everything we can. I will say this: when we talked, in the previous weeks about somebody buying a house, I'll say, boy, if they've got the income and credit, we don't care about down payment, and that's for somebody owner occupying a house, income and credit, down payments usually not an issue. I would say for an investor, uh, we really don't care so much about income. If they have the down payment, then we're good. And so yeah, it's lack of down payment. If they're going to own or occupy it, great. Otherwise, yeah, if they've got the down payment, income, even credit is probably not as important if they've got a bigger down payment. But yeah, we should be pretty good shape there.
I love it. I love it. Well, it's definitely a big conversation in the market right now. There are a lot of investors looking to move, um, looking to purchase and sell. I know I'm getting calls from investors right now. So there's a lot of chatter in the world around this, and it's great to be able to be prepared and have a partner like Andrew, who you can work with to help bring some of these solutions to your folks. I don't know what's next. I'm not finding a good segue to our next conversation. Maybe we have
uh,
a surprise next week.
yeah, maybe maybe we'll just surprise the audience next week. I'll see you an email with some topics. Did we already cover the buy before you sell? I think we did, didn't we?
No, no, we
Yeah,
didn't.
so that's a good tool for listing appointments where they're like, they may not need it, but like, well, what happens if I find a new home to buy before my current one's sold? I think
Oh,
that can help you win in listing appointments. So that's a great program as
I
well.
love it. Let's talk about that next week.
Okay, that sounds great. All right.
Fantastic.
All righty.
All right,
Thanks again.
everybody. Have a good
Yeah,
afternoon.
thanks. Bye.